what if the whole Bitcoin thing is just sort of owned and operated by the US government to some degree? The industry makes a lot of money because a lot of people who shouldn't be trading at all are throwing money into prop firm challenges. So
Basically gambling with it, right?
I think that the AI stuff, incredible technologies, definitely the future, but it's also getting overdone.
Just because you trade for 10,000 hours doesn't mean you actually know how to trade. Those hours don't equate to
Right.
proficiency.
It was like tens of thousands of jobs that they long term, I think like next 10 years, plan to completely not have a human doing. The AI world, almost certainly it's a bubble, but a bubble you can think it's like about to pop when it's only like half inflated.
All right, everybody, we're back. Trader Nick is in the house. Nick, I think this is like episode 3 or 4 together, buddy. So I'm looking forward to it. I have a question for you initially after what we were just talking about before I started the recording. What do you think of Tucker Carlson saying that Bitcoin is created by the CIA? Give me your take on this.
That's an interesting one to kick things off. It's good to be back with you for, I don't know if it's 3 or 4 or if it's 300 or 400. We've done a lot of stuff over the years, so it's good to be back. In terms of Bitcoin being a CIA operation, it's a good question. I've always thought about that. You know, there's one thing that kind of stands out to me that's interesting, which is you have, you know, like the CCP, right? The Chinese really dislike Bitcoin. The US really seems favorable to Bitcoin, although they have a lot of incentives to maybe not be so favorable to Bitcoin. I've always wondered, I'm not a big conspiracy guy, but I have always wondered, what if the whole Bitcoin thing is just sort of owned and operated by the US government to some degree? So, I mean, it kind of would make sense in the idea that, you know, you can track a lot of money going through the system much better than anything else. I mean, it's an incredible technology. And then, you know, not to mention, there's the other conspiracy that's kind of good out there, which is if the dollar is on the way out, if you're like seeing the big de-dollarization trend finally take place, if that's going to blow up at some point, and the US government is already kind of progressing mediocrely or slowly to like having a Bitcoin reserve set up and all that, and so they can jump from the old currency to the new. Who knows? I mean, and I have no idea. I don't have any stats on that, but you can kind of like line up the incentives, and it's a fun thought experiment.
It is. And you say the word technology. Some people used to say the word currency when it would come to Bitcoin for a while, right? We went through that. That kind of died. But when you think about new technology, who always has the new technology first? Not us. We don't. Wouldn't that be like one of the first times that the retail guy got the technology before the government? Anytime there's some new top secret thing, the government always gets it first, right?
Yeah.
Now we think the one cool piece of technology the government didn't get first and the retail guy got was Bitcoin. Interesting, you know?
Yeah. Right. No, it's and again, I think that if it was not, if there's no like involvement, ownership or involvement, I'm surprised that it's still around. You know, why, if it can be shorted on the futures market now. So like, you know, there's every tool available to squash it if you really, really disliked it. So I don't know, kind of interesting.
Since we're on Bitcoin for a minute, let's stay here. You know what's weird to me? The weirdest part right now about Bitcoin, how weird some of them get. Like Michael Saylor. I don't know if you've seen these clips of him. He gets so defensive when you ask him who Satoshi is. If you ask like the real Bitcoin people about Satoshi, bro, they seem to be upset that we want to know who created it. It doesn't matter, they say. Isn't that interesting?
It is interesting. I don't know. You know, it's I never really thought about too much like who is the guy, and maybe that is worth exploring and figuring out all of the details of like who created Bitcoin, and what if Satoshi is actually just like, I don't know, George Washington or something. It's like some made up character, you know, that from the past that's never actually been alive during Bitcoin. Who knows? I mean,
who knows?
Yeah, from a trading investing perspective, I mean, one thing that I like to look at is Bitcoin is there's a guy, Steve Weiss on CNBC. He talks about how he thinks, you know, one of the biggest reasons for Bitcoin to do well is that it's a token of marketing from BlackRock, who owns a bunch of, they have incentives to make Bitcoin successful through their ETFs that they've created and the ownership that they have in Bitcoin. So,
Mhm.
to me, it's like, regardless of who made it, who's behind it, whatever, like, you can kind of see where the money's going. And there still seems to be some big players at the table in favor of Bitcoin.
Today's episode is sponsored by Top One Futures, my go-to firm for instant funding accounts. Right now, you can use the code ASFX to get 50% off, making them the cheapest instant funding accounts in the game. You'll get low profit targets, large payout caps, and now no minimum trading days, so you can start earning and taking payouts quickly. If you're serious about scaling your trading, this is where you start. Visit top1futures.com and use the code ASFX at checkout. This episode is also brought to you by TradeZella, the best trade journaling software out there by far. TradeZella and I have been working together for a long time. Umar and I have a great relationship, and every customer that we've sent to him stays a lifetime customer with him. I think that's because people use it to analyze their stats, identify their mistakes, and it actually helps them improve their consistency. If you're not journaling, you're guessing. So go to tradezella.com and use the code ASFX to save 20%. That's ASFX to save 20% and start leveling up your trading today. Yeah. And it is an interesting time too when you think I guess my last thought on the conspiracy, like the quantum computing that we're going through, how fast and how smart AI is getting just in general, and this new era of computing speed that we'll go through. How safe is Bitcoin is a very reasonable question, I think, because I've seen smarter people than me on the internet in interviews questioning if quantum computing can solve and crack your code and steal your Bitcoin, how safe is your internet technology money, you know? So
Yeah.
that's another interesting part of it.
I've heard of that too. I was doing I did a debate hosting between a couple of guys, one for gold, one for Bitcoin, on the
Oh,
trading
that's
battle.
interesting.
It was a debate, and one of the points in favor of gold over Bitcoin, or actually vice versa, one of the criticisms of gold is like, oh, you can get your gold stolen, and crypto's all on the blockchain. But to be fair, if new technologies come along that can hack cryptocurrency too, you could theoretically have your cryptocurrency stolen too. So,
Yep.
nothing is truly 100% safe. I always say, when it comes to trading, like, people will be like, oh, we'll use a stop loss. Well, yes, true. I love a good stop loss on my trade, but bigger than stop loss is position sizing. And if you're talking about investing or your portfolio or whatever, the biggest thing you can do is allocation, right? Or risk management through sizing of your positions or trades, your investments. Because, if crypto goes to zero tomorrow, it's not going to kill my entire, investment journey. Or any, that's the thing, is you just being, to some extent, diversified or spread out, so that a freak event, which could happen, I don't know if that's going to happen, but it could theoretically, we want to be positioned for it.
The meteor that everybody's tracking flies too close to the earth. The internet flash crashes and shuts off. You can't get your crypto. What are you going to do? Right. I mean, you saw that
Yeah.
flash crash. The liquidation was it 2 weeks ago? It was the day I was coming back from LA. So like earlier this month, October 10th or 11th, that day where crypto just dumped. Some of the
Hmm.
coins dumped 70%, 80%, and then bounced, but unfortunately it liquidated a lot of people. I'm sure you
Yeah.
saw all the memes of the leverage kills and leverage kills. What were you thinking when that was happening?
Yeah. I mean, the thing is, leverage, as crazy as that day was, in the crypto space especially, those days are also necessary. Like,
Hmm.
they're very painful for people who are going through that. And again, I don't wish that on anybody, but when you have too much mania, euphoria, etc., it's a healthy thing. Like, for people who actually like, Bitcoin or Ethereum, or altcoins or whatever, you actually should hope for those things to periodically happen, to sort of flush out the leverage in a system.
Sure.
The dot-com era, if you're talking about like unprofitable companies that were going, parabolic, it probably, a lot of things can be helped or suspended, or prolonged, with just healthy pullbacks and corrections. Like, it washes out some of the leverage in a system. So, it shows me that in terms of the crypto space, leverage is really common in crypto world. Like, a lot of leverage is applied, a lot of leverage all over the place. But seeking out places where there's lots of leverage and avoiding those places are probably better off. Like it's probably better off to avoid highly leveraged spots uh, than not. Or if you are going to partake, it's kind of not the nicest thing to say or nicest way of saying it, but when people are getting flushed out, that's probably a better time to pick up stuff. Is like
Right.
wait for others to take the fall and then pick up the pieces. Because a lot of times what happens in those deleveraging events, again, very incredibly painful to people who are on that wrong side. They probably lose a lot of money and learn some hard lessons in those moments. But for people who are patient enough for those opportunities, a lot of times what happens in those deleveraging moments where people are getting liquidated and reset is stuff gets traded at prices that are not necessarily fair value. And so right after you see the snapback, not every time, and there's always risk, but I think there's a lot better risk reward profile waiting for those types of moments to pick stuff up at discounts.
Yeah. Do you think, I mean, that's a great transition to like the broader market question for the day is like, what has been performing well for you? I know you're always a gold guy, and you're always kind of looking at different asset classes for the best opportunity. I think that's what you do really, really well. So
Mhm.
maybe give us an idea of like what's been working this year, what played out the way you thought it would. Maybe give us an idea like what surprised you too. Did you know gold was going to double?
No, I wish I did. If I did, I would have. So I'm up. I just checked this morning. I did a review of my portfolio for the year. I'm up
Mhm.
28% for the year. I think the S&P 500 is up around 14%. So to me, it's a really good year. If I
It's a
can
great
if I
year.
can outperform without taking additional risk or leverage, I don't use leverage in my portfolios. Um, to me, I'm really happy. 2025 has been a really good trading year for me. And what have I done right? What have I done wrong? Well, in 2025, going into this year, I was very bullish on precious metals, and specifically was what really set my portfolio where I didn't take as much of losses was in April. I was like super long gold, which was awesome because of course the stock market was tanking, crypto was tanking. I mean, everything was selling off on the risk side of things, and gold did really well. And then when stocks bottomed and they started breaking out to the upside, I got long stocks. So again, am I always on the money like that? No. But this year I've had a really good kind of uh, following that trend, right? So we had gold ripping higher. I got long gold. Stocks fell out. I sold a lot of my stocks towards the end of, towards like the beginning of this year, early this year, sold a bunch of the stocks that I owned. Largely because, it's a sentiment play for me a little bit in the sense that when President Trump got elected, there was a lot of hype around his administration. We're going to the moon. It's going to new highs. And in 2025, maybe one of the biggest things that I didn't make the mistake of was the the very strong political forces that were in the trading space. So what I mean by that is that in the new year, there's a new president, and the people who really liked him got incredibly euphoric, and the people who really didn't like him got really pessimistic. And we've seen that pretty much all year long. And so what a lot of people did is a lot of people got leveraged long. Stocks are going to new highs. At the end of 2024, the market was at the highs. We were doing really well. And then we dumped into February, March, April. It was a 20+% drawdown in S&P 500 and bigger for the Nasdaq. And so during that time, the opposite stuff started happening. All those people who were overly euphoric about stocks, they got wiped out. Again, a deleveraging type of environment where people did the opposite. Portfolio managers this year, it's been horrible for portfolio managers as a collective group. They're underperforming more this year than they have in the last like decade. Reason being, they sold heavy into the April sell-off. Trump and team are going to ruin everything. And then again, I don't know if that's why they all did it. There was also, of course, the serious economic concerns that if the trajectory had continued, the economy could do terrible and we could go into a terrible recession. But that's not what happened. We saw the bottoming out right around the Liberation Day lows, and then stocks started to reverse move higher. And again, we saw sentiment kind of reach extremes where my comment section.
Hey traders, real fast, before we keep going, I want to let you know one more thing. The Black Shirt Club mentorship is officially open for enrollment. That means we're looking for 10 dedicated traders to join us heading into the new year. This is normally a 3-month program, but I'm really trying to fill these 10 spots, so we're actually offering a 4th month for free. You get to trade live with us every day, you get private coaching calls every week, and you get access to our suite of tools and indicators, all included with your membership fee. So if you want to apply, head to our website. There's a link in the description. It's asfx.biz/BSC. Again, that's linked in my bio on social media, linked down below. If you're looking to work with me and our team, apply now.
You know, I'm a macro guy, so I'm talking about like what's happening. Is the economy really crashing? And I'm going through this. And I was making the point that I was like, we haven't seen it in the data yet. Yes, there's all these fears about this, but the actual data has not started to materially worsen, like GDP statistics and inflation metrics, like still to me suggests stock market should do okay. And a lot of people were very much thinking it's all going to go to HE double hockey sticks due to the new tariffs, et cetera. Well, it didn't happen. The market got overly scared around it. Market bottomed out and ripped higher till, I mean, today we're just around all-time highs again at the time of recording this. So interesting concept is, you know, the macro really helped this year for me in terms of staying in line with the data and not necessarily my political biases or my reading the headlines, right? That was a big trap this year for a lot of people, is letting your biases about the politics of you know, America, and at the same time also like the headlines were really scary during all that sell-off. So I think that's what I did well this year is focusing on my system, the macro behind the thing. You know, was the economy going to crash? In a lot of people's eyes, they thought it was going to, but I was just looking at the data as it was coming in. And until something changed, I was going to stick with my bullish thesis, especially if we could get technical reversals. We did. We got breakouts to the upside. I went long, and I've pretty much stayed long for the most of this year, with a lot of my, you know, swing trades and position trades. So that's, you know, 2025 has been a pretty good year for me. 2024, I slightly underperformed the stock market. I compare all my results to, you know, passive index funds, just as kind of my benchmark.
Yeah. Great answer, bro. And well done, 2025. Why do you think noise has been such a theme this year? Is Trump that politically polarizing? He had this influence on the market with the first tariff war with China when he was first president, you know. Now this is happening again. You've always, like, dude, I think of you as the guy that always has bought the dip. You bought the COVID dip publicly.
Mm-hmm.
You bought the dip in the Liberation Day publicly. Like, you're always buying at a discount and emphasizing that, you know, that, I don't know if you would call it a uh 10 commandments of investing, but like, buy when there's blood in the streets, right? Is
Mm-hmm.
really when you're going to get your deal. You've done that so well. So do you think that the market now moves based on almost like political feelings more than it has? Or do you feel like it's just more noise that traders have to fight through? How does that like political commentary play into your analysis, macro and speculative? You know what I mean? On both sides of it.
Yeah, no, I mean, I think what you've set up is a really good question, because here's the thing. What people do, and what people believe and their politics, that's not what I'm talking about here. Like, what,
Mhm.
regardless of the listeners, you know, thought process on whether you like Trump or dislike Trump, that's a separate conversation. What I'm pointing out is that in markets, there's an interesting phenomenon. When COVID happened, when you know, the 2022, oh, Biden's going to send us into hyperinflation, and then in 2025, oh, Trump's going to send a. What happens here is the market gets very excited, and it tends to overreact in both directions. Again, I mentioned that although, you know, some of my best trades have been finding that dip buying opportunity, I'd say also, like in 2025, my biggest win from this year was being cash heavy before the dip. Now, of course, super easy to say in the hindsight, very hard to do. Like when the market's hitting all-time highs, it feels really dumb to be sitting in cash. I think we talked about this towards the end of last year. I was like, I'm sitting in cash, I'm staying, you know, defensive, and that feels so dumb when the market's going up and up and up. But when the market is down and you have people who are, you know, everybody sort of chases what the now is. So you have, like, when the market's tanking every day, everyone's like, Trump's an idiot, he's going to tank the entire economy. And, you know, regardless of like whether or not those policies are good or bad. What happens in the sentiment world is people go too far with their assumptions. Now, I'll give you another one that's to me a bigger theme. I can't tell you when this is going to happen. I wish I could. I'm not a fortune teller, but I think that the AI stuff, incredible technologies, definitely the future, but it's also getting overdone. I don't know where the top of the market is, and I wouldn't claim to know where the top of the market is, but they're building data centers like there's going to be a never ending source of CapEx spending from megatech companies and a never ending, source of AI demand. Well, they did this a couple other times in history. They did it during the dot-com era. They built literal fiber cables through the streets that for years went unused after the
Really?
dot-com blow. Yep.
I never knew
And
that.
Yep, and then also it happened in the electricity, 1911 or like early 1900s. What happens in markets is fascinating. People have a tendency to overshoot new technologies or to overshoot their fear about the end of the world. It's like a really, if you could just from a clear head perspective say, I'm only going to buy the market when it looks so scary out there to do so, and I'm only going to sell the market when I get made fun of. I mean, this is literally what happens to me, Austin. When I buy the market and get made fun of, I'm like, I'm doing something right. When I
Right.
sell the market and people are making fun of me in the comment section, I know I'm doing something
Time to
right.
go. Right.
it's,
Oh,
it's
that's so true.
literally the
I believe
dumbest
it, bro.
indicator, but it works.
But it's true. Yeah. Well, I wonder what that is in our DNA. It's the cynical side of us, why people want to call tops when markets are trending higher. It's the same thing, bro. You know what I mean? Instead of just
Mhm.
getting with the trend, you want to buck the trend. I don't know what that is in us. It's the wanting sometimes of your ego to be right, maybe. I don't know what it is. You want to call it, you wanted to know it, right? But like when you disassociate from that, like you do so well, I think you can actually see when the markets are down 25%, when it is hard to buy, because it does look like the end of the world, that's exactly when you should be buying, especially as an investor.
Yeah, I was gonna say if you have an investing perspective, and what I do is a good mix of both. I do some position trading that's like longer
Mhm.
term position trading slash investing, like it can be months to years. But a lot of what I do is still very active. So I might take a trade and get stopped out 3 days later, or I might take a trade and hold it for 3 months if it just keeps going my direction. Like gold and silver. I had a really good trade on silver this year as well, and I had plenty of things that didn't go well too. Like there was a lot of losers in between, but I'm talking about my winners because I have a tendency to trail stops. That's how I approach
You run the
trading.
winners. When we did the last podcast, you were
Yeah.
running I think it was GLD.
hmm Yep. So I try and let things run because again, exactly what you pointed out, where we have a tendency to want to call where that top is going to be. And what I found is like sometimes when you catch the right thing, it will surprise even you how far it will go. Like if you actually are on the right side of something and it just goes and you're like, oh my gosh, I feel like I need to lock in profits. And then you just stay regimented. You're like, nope, just going to trail a stop, see what happens. And it just like makes this big leg higher or big leg lower and you're short. Like those moments are where you're like, okay, the market's bigger than me. I'm just going to follow the market.
So you think AI top coming in? Okay, I have a thought on that before we leave that too much. AI induced jobs recession is my thought.
Mm,
People getting fired. Yeah, we're all hyped up on AI in the stock market, but there's cracks in it. You just pointed out one with the data centers. I'm pointing out another one. I think it was Microsoft.
hmm
So one of the Mag 7 laid off 600 people yesterday in their AI department. Maybe Facebook. Someone again, 600 people is not a lot of people. But all I'm saying is AI not only maybe will lead to physical manual labor jobs in the warehouse. We all know Amazon is all robots getting replaced there with AI. But I think even some of the tech jobs, like as the AI gets smarter, the tech people will be less needed. You know what I mean?
Yeah. Well, and even following on your AI with Amazon world, I think they have like plans to, I don't want to give out a number, but I read something that was crazy. It was like tens of thousands of jobs that they long term, I think like next 10 years, plan to completely not have a human doing.
Yeah.
So I do have a thought on that too.
Okay.
And
Tell
just
me.
before I go on with that, to clarify with the concept we've just talked about with like trend following riding markets, when it comes to the AI trade, I have no idea where the top of that market move is. It
Right.
could go on for 3 more years. It could go on for
It's
5 more years.
It's right.
And it feels like, again, my brain, like 5 years ago, 10 years ago, my brain would have said AI trade is getting overhyped. I see a lot of euphoria and froth. It's got to be coming. New era to me is like, okay,
More wise, you.
eventually, yeah, I mean, enough pain, enough losing in the markets being wrong, you start learning something, hopefully. But yeah, I mean, this time or nowadays, it's like, okay, that almost certainly is a bubble. But a bubble, there's a wonderful example that I think everyone should learn from. In 1996, Alan Greenspan, the standing Fed chair, looked at the stock market, which had been going up and up and up. It's 1996. It had been going up for years. It was going parabolic, straight line up. And he said the market is showcasing examples of extreme euphoria. He called it irrational exuberance. That's how he described the stock market in 1996. Well, in the next 4 years, it like tripled. So, or did some like double or triple.
Right,
It
because of the
went
dot-com bubble. It went
way
even
further.
higher, way
Yeah.
higher.
Like beyond. So the point is, here's supposedly the smartest economist of the world, the standing Fed chair, and he was off by 4 years on that bubble. So he saw that it was a bubble. A lot of people saw it was a bubble. A lot of people in the late 90s, a lot of people shorted tech stocks and blew up. Smart hedge fund managers, big players. Um, there's numerous stories of people who were like, this is a bubble. It's very obvious it's a bubble.
And they just blew out because of timing.
They blew out with timing. And that's the old expression in markets is if you're early, you're wrong. And so when it comes to, the AI world, almost certainly it's a bubble. But a bubble can you can think it's like about to pop when it's only like half inflated.
And then it's
So
going here.
right. It
Right.
could go. And then to follow up on your concept about job replacement, I've done some research on this, actually asking AI for help on this. I use Grok, which is the thing in Twitter,
Mhm.
XAI. So I ask it, does AI destroy jobs? I'm asking AI, do you destroy jobs, basically? And it actually gave a really good answer that I think I really agree with, which is throughout history, new technologies initially displace jobs. They initially take away a lot of easily automated jobs. This is not the first time we've had new technology that people are fearful that are going to take their jobs. That's happened many times through our history, and every time it feels like, well, this one's different because this one's really good. They've all felt like that. Electricity, the internet, like so many things in the moment feel like this alien technology that we're getting, and we can't possibly compete with it. Well, I think AI, is just my opinion, I think it will probably, I mean, it's certainly displacing right now some of the more repetitive automated jobs. But then longer term, I think probably it will create new industries that we've never thought about. Things that we have no idea right now, like new industries that we have no concept of, will probably arise
That's
because
a
we
good
have
thought.
more problem solving ability through the use of AI. So maybe we're not writing our own emails, maybe we're not scanning for data, maybe we're not compiling data by hand, but maybe we're building way more stuff. And one thing I like to think about is that maybe with the help of AI, humans go to space sooner. And if you go to space sooner, how many jobs does that create? Going to space, if we're building intergalactic travel and colonies on other places, I mean, I mean, that might be 100 years away or 200 years, I don't know. But the point is, if our scope of projects becomes way bigger with the help of AI, so too does the demand for critical thinkers,
I think that's
people
a
who are
great thought.
creative. Yeah.
I think that that's a great thought. What about, just before we leave AI, how do you think UBI plays into this? I worry that again, like the job replacement for at least this interim, because what you're talking about, to
Mm,
do that successfully, you would need to re-educate an entire generation of kids. The way they're learning, the topics they're learning about, that's going to take some time. So there will
mm,
be an overlap of where people will be replaced by AI, or at least not needed, and AI will be more efficient, and the capitalist societies will want the AI to do the job instead, like we were
yep,
just talking about, right? So
yep.
if when that happens, do we need to give people 2 grand a month per person in the household to keep them fed and keep their rent paid? Because they can't work. There's no one that will hire them. It's too expensive,
Yeah.
and they have no skills. They're out of skills that compete in the workplace. You know what I mean?
Yeah. I mean, It's a difficult one. I mean, that is a difficult concept,
And that's an interesting concept coming from me because I'm a conservative guy that conservatives typically hate the UBI, but I don't see another option. Like if we get to that point, people will revolt against the machines if you don't give them money and just let them be content. You know what I'm saying? We'll
sure.
have the Matrix. We'll be living underground. You know what I'm saying?
Yeah. Well, what's difficult is my my thought process on it, and I think ultimately kind of got to leave it to the governing bodies to make the decision as to what's right for social constructs and things like that. But my thought process on that side of things would be people want to feel like they're contributing, and if you just give them money, first of all, once you start doing that, you'll never be able to take it back. That's how, any
It's true.
handouts work, is once you start giving it to people, people feel entitled to it, and that is a slippery slope. But then also, I think that people, you know, they don't want to feel like they're not even contributing to the system that they're in. I think to some degree, I like to be optimistic and think that people,
I'm in that same boat with you, bro.
yeah,
I
well,
hope that
yeah,
people wouldn't want to just F off and spend the money on drugs and do something stupid. You'd hope that they'd
right,
be like, oh, my rent's paid for. Let me start a little business doing something that I'm good at and that I love. And I might not make enough money with that business alone, but with my stipend, I do. You know what I mean? That's what you
right.
hope for.
Yeah, and maybe to your point though, I do think there's probably a gap where like initially, if the jobs market continues to be as slow as it has been, it's not been great at
No,
all. But
no.
if that continues to be the case for a while, and companies are easily able to kind of like outsource a lot of stuff to AI in the short run, that's would previously be like junior hires, et cetera. Yeah, I mean, there's certainly some potential for downside in the economy, and perhaps people are get desperate and things like that. But again, it's a slippery slope to start a program like that, because it will never stop, in my opinion. If
It's a
it
great
starts,
point.
it will never
Right.
ever stop. So, it's tricky. It
It
really
is
is. I don't
tricky.
know the answer. I think that
No, and
in terms of in terms of the longer term stretch, I would think that and hope that new, because there are things that AI is really good at, and there's things that AI is just really not good at, and
it's true.
um creative brains are still, like, you have to still have someone who knows how to guide the AI to build what you want to do or to do. So I'm hopeful that education shifts in a direction of like how to actually use these things to create and really bolster up people that are creative. I think that's really where AI is harder to replace people that are creative brains.
So you think we need to short the companies that are building the data centers, though? That's where the money's at right now. That's what you're saying.
To do what with them? Short them?
Short them. Well, because I think the fear is that we're back to your data center point. I think the fear is that China's building so much electrical infrastructure that we have to compete. And if we don't compete, we're screwed. I keep hearing that. What are your thoughts on that?
Yeah. I mean, the thing is, the grid build out it's a massive, massive like thing, because the
You're
amount
right.
of power that you have to build for these things is immense. I mean, and I keep hearing this another lady that I listen to. She always points out stats like this. I'm not going to try and claim what they are, but she points out like essentially we have these amounts of data centers, but we need way more over the next 10 years. And so, do you invest in the sense of building out? So are you buying like XLU, which is utility companies, power companies? Do you buy those? Do you buy energy stocks? Do you buy
What'd
those
she
sorts?
say?
And she loves them, right? She's a
Yeah.
grid, big bull on the grid. So buying construction companies and all sorts of different infrastructure build out stuff. I agree. I mean, I like it. I like it too. I think that the other thing would be, I'm not really heavily investing in a lot of stuff right now, just because, again, I think that you've now started to see the opposite shift where everyone is sort of really bullish. I own a bunch of stuff and I'm just trailing it. So, yeah, I think a lot of that stuff, during times like this, I like to build my watch list. Like when everything's just going up and up,
Right.
if there's
Where's the
something,
next opportunity? Right.
yeah, I'm just like, okay, I'm going to add that to my watch list. Like there's certain things I really want to invest in, but I can't buy them right now. So I just add them to a watch list in my trading view.
You you mentioned healthcare last time we had a podcast as
hmm
being a potential play. Did you end up taking any action on healthcare stocks or the sector in general?
I did. Yeah. I've traded XLV, the healthcare ETF, a number of different individual stocks. I haven't as much in the recent months, but going into 2025, I was long healthcare. I traded BIIB recently, which is Biogen. I had a long position on that one from a breakout that's been still going well. So I mean, I'm really active in terms of all the trades. I guess it depends on who you ask, but like for me, 20, 30 trades in a month is, to me, is very active. But I know there's like scalpers and day
No,
traders that
of
are like,
course, but it's different. I
20,
think it's
30
just
a day.
right, right, for sure, for sure.
Yeah,
I had a joke on stream the other day. I said prop firms, which we have to talk about too for a second. Prop firms are the Ozempic of the trading industry because
it's true.
they give you the instant result, but the habits that you build underneath the
Wow, that's a
surface for trade.
perfect. Yeah, that's
Oh,
perfect.
dude, I hit it on the head, didn't I? Everybody was
That
fucking laughing at me and shit,
that's
dude. It
so
was
good.
so funny, but it's
That's so
true.
good because that's so true. Like even with those weight loss things, you still got to put some work in. Like you can't just I mean, and even if it's not necessarily like mental work as much as is like your physical, or the amount of money you're spending on those things are very expensive. So that's a great point.
What do you think about the state of the prop firms between Forex now doing it, futures doing it? There's crypto prop firms now partnered with Kraken. So, like, you and I have been around since it was just like FTMO and my Forex funds. Even my Forex funds is making a comeback potentially. I don't know if you saw that too,
I
bro.
did
So,
see
what do
that.
you think about the state of the market right now? Do you have a lot of guys in your community doing prop? I feel like you attract a good mix of like guys trading their own money too.
I mean, prop firms have just taken things by storm. I mean, everybody's trading prop, and I'm all for it, as you said, it being the Ozempic to your, I mean, there's certain people who Ozempic's good for. It's a small portion compared to maybe all the people, but like it's the same thing with props. I think prop firms are a great thing for a select group of people who are genuinely already good traders and who are just looking to scale it up. But I think that's not why the industry makes a lot of money. The industry makes a lot of money because a lot of people who shouldn't be trading at all are throwing money into prop firm challenges. So
Basically, gambling with it, right?
yeah, and again, I think the whole industry is kind of like that. Most people, who trade lose money. That's where all the gains come from across the entire market space. Everything from financial advisory to prop firms to brokerage houses to actual profitable trading. It all is funded by losing traders, which is a dark thought, but it's a reality. So it's
Yeah.
you can't really get away from that, and all you can do is in our case share genuine lessons that we've learned, try and help people as much as we possibly can, and but yeah, I mean, it's the reality of trading, unfortunately.
Do you feel like there's like, because what I've seen is a lot of people stepping into the prop land for the first time, like at all, they're ever trading, and it's limiting their downside. That's like the main pro that I'm seeing versus like when you and I started, you just put your own money in and you were just losing your own money every day, losing your ass, and you worked for the
Hmm.
money, and it was the downside was theoretically uncapped until you just ran out of money, right? So I
Yep.
feel like that pro in itself is the only thing that I hold on to is like, especially like my barber asked me last week, he's like, how would I start? Like, what do I do? Like, I don't know what a broker is. You know what I'm saying? I'm like, this guy probably is better off paying $40 to
Mm.
$150 or whatever to a prop firm and just taking a whack at it. Do you agree with that or do you disagree with that?
Yeah, I mean, I think that the there's pros and cons to everything. I think that, the best way to do it that nobody will actually do is to trade on a demo account and just test
Right.
and try things out for a while. Everybody wants to jump into a real thing. If you're assuming like, okay, people aren't going to do that, people are going to jump into something, is it better to go fund your account or to trade a prop firm account? Probably a prop firm account, probably. Because again, I think that you could tell that person, I could tell them, I could literally look them straight in the face and say, you probably should not touch any of this because you are not yet, you don't have the skills. Like prop firms are not really meant for you, but like at the same time, they really are meant for you because that's how they make money. But
Right.
like, again, you can't tell people. It's sort of like, you have to learn everything yourself, right? Like you have to
For sure.
experience a hot, griddle on the stove hurts when you touch it. No, somebody could tell you that, but that's not going to, like, you're not going to learn the lesson until you burn your hand. Like that's how, people learn things. So when it comes to trading, it's the same thing. Like you can tell people like, hey, you think you're the exception. You are not the exception. Markets are unforgiving and they're really difficult. And you can tell people that all day long, and they will not listen to you until you obviously, or until they have experienced the pain and suffering of losing trades themselves. And so, yeah, I think actually there's nothing wrong with the concept of prop firm accounts, small, starting small. But I also think there's a trap in the sense that you can also tell yourself, well, it's only $100, it's only $150, and then like a lottery ticket, you're scratching them off every day.
I know people doing that, and it's bad.
Yeah,
Yeah, yeah.
yeah,
I
you got
was
to be
at
careful.
that. I was at that event, like I said at the beginning of the month, with David Capablanca and Tom Hugard. Tom gave a really good speech. You know, Tom, he wrote "The Best Loser Wins."
Hmm.
He said that, like, he gave a lot of good resources, or like examples for people to go study. He used studies like as a reference point. One thing he talked about that's interesting was Malcolm Gladwell and his 10,000 hours concept that he's famous for, right?
Mm,
Mastery, Robert Greene, same concept, 10,000 hours.
yep.
Tom gets up there and he's doing it in his accent. He's got this Dutch accent, which I love, the the German accent, because the chats, like
It's
the
cool.
A,
Yeah.
it's cool. So you just sound smarter. And he's up there and he's talking about how just because you trade for 10,000 hours doesn't mean you actually know how to trade. Those hours don't equate
Right.
to proficiency. Do you agree with that or do you disagree with that?
I agree. I think that when it comes to hours on the chart, you have to have them, but hours on the chart that you're not like really locked in don't really count. So like I would say the middle ground would be saying 10,000 locked in hours, like where you are really learning, you're really documenting, you're journaling, you're back testing, like you're doing the things that are hard work for 10,000 hours, not 10,000 hours listening to a live stream. That doesn't
Sure.
count, right?
Or
Like
just sitting there staring at the chart. That
yeah,
doesn't
or like you're
fully.
just watching chart movements. Like that's not 10,000 hours. 10,000 hours is 10,000 hours of dedicated learning and
Yeah.
focus and strategy building and back testing and all the good stuff.
So his analogy was, I've been driving a car for my whole life. I'm 60 years old.
Hmm.
I get a birthday gift to go drive a Lamborghini or a Ferrari at a racetrack. He's like, I didn't know how to drive for shit. He's like, it felt like I'd never driven a car before. So it's
Right.
like you think you're doing something right to the fullest extent, but you're not. There's a whole nother thing that you've never cracked into before. And I think
Yep.
like your point about like doing the hard work matters too. But I think like even more, I would say adding feedback. Like you got to get feedback as a trader, or you won't know that you're actually doing something right or wrong, I think. So tell me,
Definitely.
like, give us the high level catch up before we wrap up on everything you've got going on with Frank and the boys on the software side. How are things on the YouTube channel? And maybe one more trading question I wanted to throw at you too. Like, I'll let you answer that first. Give me the update on the software and the YouTube stuff. Then I'll hit you with the last trading question.
Yeah, things are good. So we as I mentioned earlier, sentiment and macro play a really big role in what I do in trading in markets. So we are constantly trying to improve our tools. We have a pretty good sized community of people around the tools that we've built, and even this morning I was building surveys to ask people which features they like. So I'm really locked into like not just what I think should be added in the software, but rather what people are actually telling me, like, hey, this feature, I love this feature, or I don't love this feature. So that's a lot of what we're doing at A1 is we've built some really cool stuff, but we're really dialing it back and trying to better educate people on how to use the stuff that we've built, as well as really isolating the core things that people struggle with and improving our tools to be more intuitive every day. I mean, that's a big thing about software that I think that not all companies in the space do really well, which is a lot of companies are they build something that's really cool to them, but you really have to focus on what is helpful to the customer. And so in terms of what we build dashboards that study the macro, like GDP growth and CPI numbers, and scans all this data for you, but actually conveying it in a way that makes sense to the average user is what we're really after. So we've been all sorts of education and things to build around the tools to make them more useful. And then things are good at the team. We're lean and mean, as I mentioned when we started. We have a core team here in Atlanta, and some people all over the world that are helping on the freelance side of things. So things are good.
Do you think that the product will work well for any specific market? Like, do you attract more forex traders? Can I as like, well, the futures traders that are listening to this, will they take value of it? Yeah, right? Because it's data that still helps you make informed decisions about the macro.
Yeah, for sure. I mean, the products themselves are built for commodities, indices, forex. It's really just a sandbox to scan macro fundamental analysis as well as market sentiment. So if you're a forex guy, our tools are for you. If you're a stock index person, if you trade Nasdaq or S&P 500, our tools are for you. If you trade gold, our tools are for you. Like the purpose of these tools is to scan the macro, which is not necessarily isolated
Any
to
specific
forex.
market, you can
Yeah,
take
it's
that
all
trade
market.
idea. I understand. Oh, you see
Right.
something happening in SPY. We could play that through options. We could play that through futures. We could play that through
Exactly.
whatever. Yeah.
Exactly.
Um, are you guys offering a free trial or anything, Nick?
We do. We
Cool.
have a free version of the tool that's available on our website, and we also have we do 30-day trials that you can pay for. So we have like a small fee. Truthfully, we had a lot of people who would just get a free trial, the full version, and then switch emails the next week and switch. They would just kind of like play the system.
Bastards.
So yeah, so it ruined it for everyone. But we do have a free version of the tool. It's a limited version on our website, and then of course we have tons of resources that you find on my channel or on our website.
Yeah, and I'll make sure everybody we got a link in the description for you guys to check that out. Definitely recommend it. I got to get plugged back in for sure, Nick, because I want to see how it can help me. I've experimented a little bit in the last few months. I got away from macro. I got into the options levels in the future space on the ES because I've interviewed a couple of guys that were talking to me about how the options dealers with the zero
Mhm.
DTE stuff are
Yep.
hedging their positions in the future space. So I was trying to understand how to use those levels with VWAP. Got me nowhere, got me frustrated, got me looking at too many levels.
The call
I'm
walls, the
already
put walls, gamma. Yeah.
Exactly. See? You know
Yep.
what I'm talking about. But then already I was using order flow with Bookmap and I like that. That helps me a lot. So it wasn't complimenting to me. So I think I need something more on like the macro on the news side of things because I'm interested in that. And then I also think from a person like me, like I'm taking my prop firm payouts, I'm trading my own capital, I'm investing for the long term.
Sure.
I want to know about the macro in that sense too. So for the listener, if you're thinking like, how can I apply this? If you're making money as a prop trader, even as a futures trader, whatever it is, you can't just put that money at Wells Fargo and let it sit there. We all know
Right.
that. We didn't
Right.
even talk about that. We already assumed everybody already knew that, but you can't be letting it sit there, right? Everybody with inflation and everything like that, you got to get that money back to work. And
Yeah.
that's why, dude, I've even been talking to people that do call option selling for premium, learning
Mhm.
about that.
Yep.
I'm
I do
learning
a lot of that
about
myself.
Yep, so I'm
Covered
learning about
calls,
leaps,
cash secured
covered calls.
puts.
Yep,
Yeah.
yep, so leaps even too, longer term
Yep.
option plays
Yep.
that you can play just to amplify some of the games rather than buying the outright shares. So I'm learning about these instruments now, different ways to take the profits from the speculation and get it reinvested, you know what I'm saying? So
Yeah.
that's good.
I love it.
Yeah.
Yeah, man.
Dude,
It's a lot of stuff that goes into macro, and it's like anything else. It's there's a learning curve to it, but it's to me, you start looking at the financial markets through the lens of macro, it makes so much more sense. It's like, oh, that's why the Nasdaq's making these moves. That's why gold is doing this. This is why the dollar's down this year. Like you start embracing that, you're like, this is the real story of the markets. This is why things are
right.
moving.
And it's not the end of the world, and you can actually make money on it and put yourself in a position to be protected, right? And
Yep.
protect the money you've
Yep.
made. What I was going to ask you is like the last thing. You made the healthcare prediction a little bit last time. You already made a prediction about the AI bubble. So when shit starts to hit the fan, we'll have you come back on. We'll do a live stream together, bro, and we'll go crazy and we'll have to shorten video or something. We'll short the. There's got to be with all the levered ETFs. There's probably a short triple levered Nvidia ETF we could buy. You know what I'm
For
saying?
sure.
For sure. With how many options, like different things they offer now, it's crazy.
Yeah.
What's the forecast for 2026? Do you think that this is stalling? Do you think we're in for a lost 5 years, a lost decade, no new all-time highs once we settle in here? What's your thought? What areas should people be looking for opportunity if you could give them any sectors?
So right now, I would stay with what's been working in the sense that I've been buying dips on the stock market. I still think you have interest rate cuts coming. I think you have corporate earnings that still look strong. I think you have GDP growth that is above trend. I think you have employment that still, yes, it's been a little rocky here recently, but unemployment rate still at long-term historical lows. I think for now, you stay with the trend. You don't fight it. At some point, we'll reevaluate. At some point, will CapEx spending slow? Sure. Will the AI trade break down? Sure. But I think the biggest risk, and I'll end on this, the biggest risk I think to the stock market going down is the stock market going down. And what I mean by that is that if the stock market goes down, it will freak out a lot of the high-end consumer, which is propping things up. So a lot of people who have money have been benefiting from the wealth effect that the stock market's up. It feels good. Hey, I got money in my portfolio. Everything's up. Things look good. Crypto's up. Stocks are up. Real estate's up. Everything is up. You feel good. If the market goes down, those same people start to pull back on their spending. Consumer spending at the high level would be the biggest risk that I see in terms of the markets, because what would happen is if big end consumers stop spending so much, then it will start to reflect in the big spenders on AI in terms of their speculative investing, the Mag 7, buying endless amounts of AI infrastructure. Again, do I know when that's going to happen? No. But when it happens, that's a cue. To me, like if you start to see a true kind of CapEx contraction, like spending from big companies in
You're
AI,
saying specifically like Oracle, Intel stops investing as heavily.
right? Like Meta and Google and Amazon, the big Mag 7, if they stop spending aggressively, now here's the
That's a
thing.
bad
By the
sign.
time that happens, the stock market will
Right.
already be
Stocks already
down.
gonna be down, right? It's
But
already
yeah,
gonna be in there. Yeah,
but yeah,
the
that's what I would
age-old
look
question,
for.
is it priced in already? Right. No, but
Right.
that's I think that's a great thought, you know what I mean? Because like, I think the best advice probably of gate out of everything we've said is like, bubbles will probably get bigger before they pop.
Probably.
Just because 'cause you've identified it as a potential bubble does not mean it's time to pop. So
Yeah.
the AI train is still the train, and it can keep on training and trucking. Didn't they just announce Elon getting some big bonus package if he hits certain valuation with Tesla? So, bro, this thing you and I are gonna live through probably what, a $50 trillion market cap of a company. We'll probably at least live to that.
Probably.
Yeah,
Eventually. Might be
eventually.
10 years from now, might be
Right.
20, might be 5. Who knows?
Right. Right. Yeah. Yeah. Who knows? Dude, this has been amazing. I appreciate your insights always. I really do. It's always a good time to catch up. We should chat too, because if you guys are, we have a boot camp coming up in May next year.
Oh, cool.
Everybody listening to this already knows about that. But if you guys are interested in sponsoring something, I'd love to have you guys on the stage, on the logo, even give you some tickets. We could talk. So if that's
Yeah,
of interest, I think getting the product, because there is nothing else out there. Like I don't know who is your competition. You're the only one that I think of when you talk about a macro screener that's easy to use. That's outside of like the native trading view
sure.
screeners and stuff, which are just stock screeners, right? So
Right.
this is just a totally different type of screener. I just don't know. I don't even know who is in the competition. So I feel like once traders see it, they'll want it. If it fits into their trading strategy, they'll use it every day. You know what I mean?
Yeah, for sure.
So
We can definitely talk about it. It's been good as always, Austin. Thanks so much for the conversation and for having me on, man.
absolutely, buddy. Everybody, links are in the description for Nick. As always, subscribe. We drop new episodes every Saturday. We appreciate you staying all the way through. Again, Nick, thank you, buddy. Everybody, we'll see you next weekend. Thank you.
See you guys.